In the years since the pandemic unsettled the office market, many have been anticipating an increase in distressed offices. While distressed activity has been muted to this point, weak demand, falling prices, and a potential recession could lead to an increase in distressed sales in 2023. Higher interest rates have already put pressure on owners with floating rate debt and will provide a substantial challenge for loans that need to be refinanced this year. Remote and hybrid work have become entrenched, and the tech industry, which drove much of the leasing of office space in recent years, is now contracting and laying off workers, thus further decreasing demand for office spaces. The U.S. office vacancy rate continued to rise, reaching 16.6% in January 2023, up 80 basis points, year-on-year. Although offices in urban locations experienced the sharpest decline in asking rents, developers were most active in these areas. As of January, there were more than 66.5 million square feet of office space under construction in urban locations, representing 4.9% of total stock. Meanwhile, offices in CBDs and suburban areas are set to increase the national stock by 1.4% and 1.2%, respectively. Taking into account the overall economic uncertainty, the entrenchment of remote work, and the upheavals triggered by increased interest rates, office market outlooks anticipate that there will not be much capital for office transactions this year. It's expected that office transaction volumes in 2023 will be at their lowest levels since the years following the Great Financial Crisis. A flood of distressed office sales could trigger a downward price spiral for offices. Distressed sales will most likely increase in frequency this year, but it is too early to say whether it will be a large wave. What does AK say? If we believe that this is a structural change, then we should not be investing in US office REIT. Don't touch them. However, if we believe that it is temporary and that things will improve once inflation and interest rates decline, then should we invest in US office REIT? I would say we have to be very selective. The challenging environment for US office REIT could last for as long as it takes for the Fed to fight inflation, and experts mostly think that interest rates will stay higher for longer. How long will this last? Possibly till late 2024 or even 2025. So, if we must invest in US office REITs, only pick those with strong balance sheets, which means a very low gearing ratio, a high level of fixed interest rate loans, and long-dated loan maturities. The US market is different from the European market. It is easier and more comfortable to work from home in the USA, where homes in the suburbs are bigger and, often, have spare rooms which can be converted into a home office. At this point, I do not have any exposure to US office REITs like Manulife US REIT or Prime US REIT. They could be asking their investors for more funds, or they might have to sell some of their assets if things do not improve.